Thangamayil Jewellery posted a weak set of numbers for the December quarter as growth slowed down and profitability got affected by hedging losses and increase in employee and marketing expenses. You must be wondering why we would then recommend it as the idea for profit. Well, the company is raising funds through equity issuance to fuel future growth. Also, the mandatory hallmarking regulations provide conducive growth environment for organized players like TMJL. Demand improvement in the ongoing quarter, expected normal monsoon as well as recent resumption of uptrend in the gold prices augur well for the company. The stock price, if you look at it, it has underperformed with a decline of 13% in the past 3 months compared to Nifty's 5% fall. Long-term investors should therefore look at it as an opportunity to add the stock to their portfolio. TMJL's revenue growth slowed down to 3% YOY in the December quarter. High base of the corresponding quarter last year, coupled with the slowdown in rural demand, affected sales. Gross margins declined 190 basis points YOY. Hedging losses coupled with slightly adverse mix impacted the margins. Moreover, TMJL had higher employee costs and advertising expenses owing to addition of new stores, which affected EBITDA margins. EBITDA declined 42% while net profit saw a 58% degrowth YOY. TMJL is seeing an improvement in demand in the current quarter. With substantial easing of COVID-19 restrictions, we expect demand to improve further from these levels. Also, the southwest monsoon is expected to be normal this year. Good rainfall will lead to increased crop production and boost farmer incomes, which would be positive for a rural-centric player as TMJL is. Apart from the rural areas, TMJL is also expanding in urban markets. It plans to open a store in Trichy, in fact, next month. Furthermore, gold prices have increased by about 12 to 13% in the past 2 months. Higher gold prices would boost realization as well as revenue for TMJL, which is a largely gold ornaments player, which derives more than 90% of the revenue coming in from gold. The company plans to scale up business from the QIP proceeds. With increased scale, TMJL will realize benefits of operating leverage as well. Corporate overheads, marketing as well as selling costs would be apportioned over a much larger revenue base, enabling TMJL to improve its margins. Furthermore, it would also enhance the share of studded diamond jewellery and introduce contemporary designs as it expands in the urban areas. This would enhance the portfolio and help TMJL to improve its margins. Jewellery players would be required to sell jewellery with higher levels of purity in order to get mandatory hallmarking certification. This would reduce the pricing differential between unorganized and organized segments. Consumers would shift towards branded players like TMJL. The unorganized segment right now is dominant in the jewellery industry, contributing about 70%, and hence there is huge scope of gains for organized players. Meanwhile, TMJL's board has approved fundraising via QIP, which I just mentioned. It plans to raise up to 400 crores through issuance of equity shares to qualified institutional buyers. The funds raised would be utilized for enhancing its store count. Finally, coming to valuations. At the current market price, the stock is trading at a PE of 17x its FY23 projected earnings, which is close to its long-term historical average. Therefore, we think long-term investors could add the stock at this juncture to their portfolio.